Okay.
All right, everybody, welcome once again to Friday Night Forex and Chill. Friday Night Forex and Chill started out as a group of traders just hanging out on Friday nights, learning how to trade Forex and sharing our knowledge with each other as we grew in our skill set. And now we get 100+ people on here every Friday night because people are hungry for this knowledge that we are giving away for free. It doesn't cost you anything to be on here. You can ask questions, you can mark up. We teach you all that we can in this limited time on Friday nights. The only thing we ask, if you got any background noise, to be muted until you're ready to ask a question. We do want you to participate. Please ask questions. Please talk along with us as you see fit, and I apologize in advance. There's a squeaky toy going on in my background. My puppy got a new toy today, and my grandkids got some new toys in there the next room playing. So once again, I thank you. We are covering market structure. Market structure is basically being able to look at the Forex market without any tools or indicators and tell what the market is doing. All right, I heard a little squeak in the background, so I had to mute and tell my puppy to stop squeaking.
Yeah, I heard that too.
He's so excited he got a new toy today. First off, I would like to thank Dr. Kathy and Cam that gave us access to their Zoom tonight so that we won't have a waiting room limit, that we can accommodate up to 500 people tonight. So thank them whenever you get a chance, Dr. Kathy, Kirkland, and Cam. All right, so market structure teaches you to look at a market without any indicators or without any tools and basically be able to tell what that market is doing. And your tool in this instance would be your eyes. So some of the rules of market structure, let me share my whiteboard here. All right, the basics of market structure. These are some basic rules. We identify the overall trend of the market, and that's what is the market doing. And we look at that on the monthly, weekly, and daily. Number two, when is the market going to make its move? We look at that on the 4 hour down to the 1 hour. And when do I make my move or enter my trade? We look at that on the 15-minute down to the 5-minute. The market moves in 3 ways: impulse, correction, and continuation. We'll get more into that. And the basic tools that we need are trend lines, rectangles, and horizontal rays. Our job as traders, we like to call ourselves investors, is to box in the market and react to the price. All right, so let's go back over to the market. I'm going to mark up one chart. Then we have some great traders on here who are part of my team, or if you're on somebody else's team and you want to show off your skill set tonight and mark up a chart, please feel free to do so. We just want to show everyone how fast and easy we can mark up the chart and determine what we're going to do in as little time as possible. So this first time, I'm just going to run through the chart real fast just to show you how easy it is. Okay, I'm on my monthly time frame, and I am going to use a horizontal ray to identify my most recent low and my most recent high.
Share your screen, please.
Oh,
we need to see your screen.
Yeah. Okay, new share. All right. That would make a lot of sense, wouldn't it? I forgot I'm using the whiteboard tonight. All right, let me erase this to start over. Told you it was my first time using the whiteboard. All right, we're looking at GBP USD, which is the Great British Pound against the dollar. We're on the monthly time frame. I like to use the horizontal ray, identify my most recent low and my most recent high on the monthly time frame. Then I'll go down to the weekly. Now this is my demand zone where buyers take control, and supply zone where sellers take control. I'm going to do this in the middle again. These are support and resistance areas. Then I can go down to my daily, reset my market here, zoom out. Now I see on the daily, we have been in an identifiable uptrend, and I'll draw my trend line from the swing low to the swing high. Now, right here, I know all that I need to know about this market. I know that on the daily, I am in an uptrend, and I'm in an uptrend until it breaks this trend line. Okay, the market moves in 3 ways: impulse, correction, and continuation. And you see here we had an impulse, had a correction, had a continuation, a correction, and another continuation. All right. So any sales that we have had coming off of GBP USD in the last few weeks have been corrections. So until we get a correction that breaks through this trend line, we are in an uptrend. So yes, we could catch a sell and make a couple hundred pips, but then it could bounce back up because we are in a buyer's market. Now, at any point, should this hit this trend line, break it, correct, then we would be in a downtrend and we would be in a seller's market, and just identifying levels of impulse, correction, and continuation. Does that make sense to everyone? It looks really fast and easy, right?
Yes.
I'm gonna do it one more time.
Slow motion.
One more time real fast, and then we're gonna identify how we would trade this pair, okay? And I'm gonna show you, you can mark up a pair in 30 seconds or less. I'm on my monthly, demand zone, supply zone, weekly, support and resistance, daily, trend line. I am in an uptrend. All right, now I want to start looking for possible sell areas. So I can go down to my 4-hour, and I see right here at the top, we have an area that is acting as a resistance area. If we look left, when it was there the last time, it sold off. Now it's retesting it again, and we could see this sell off. So we would start looking for sell opportunities on the smaller time frame. And the only time we would enter is if we got an aggressive break. See, right now we don't have an aggressive break. These are corrective candles because they are moving sideways. Remember, the market moves 3 ways: impulse, correction, and continuation. So we've had all of our impulses to the upside. Now we're just getting a continuation to the side. The only way we're going to enter this market is if we get an impulse and a correction to the downside. Then we could sell the continuation. Or if we got an impulse move to the upside, which would break our previous high, don't get in unless you see a correction and then a continuation. Because if you see an impulse to the upside, it could be a fake out and just come right back down in here, just like it did right over here. See, a lot of people probably got knocked out of the market because looking at this area, if we look at it on a higher time frame, the last few times the market came to this area, it rejected. Okay, let's move a little bit left. And if we extend this line out, we can see several times in the past few months that this area has rejected. And so when you see those little wicks popping through there, that is what they do to trap you into thinking that the market is going to keep moving up. But as we see the last few times it's been here, it has not moved up. Now we have Brexit going on, which affects all the GBP pairs. If Brexit is favorable to the Great British Pound, we could definitely see this break and continue to the upside. So right now, like I said, if you've been catching any trades on the GBP USD, you have been catching any sells, these have been corrections because this is definitely a buyer's market. Anytime you are above the trend line, you are in a buyer's market. So let's look at a seller's market. Back here, you would have been in a seller's market. Let's just highlight this area right here because you were below the trend line. So this happened, we got an impulse, a correction, we got a continuation, a correction, and a stronger continuation. If we went to a lower time frame, we would see multiple continuations down. So here we were below the trend line, we were in a seller's market. Here we are above the trend line. We are in a buyer's market. So that's just how easy you can identify what to do with the market without any type of indicators or moving averages or anything. Now, later on, as you advance in your training, you will be able to add things such as a MACD or moving averages to help you identify your entries. So let's take a look at this market once again, and let's mark off an area that we would possibly be trading. Okay, let's just say we were focusing on this sell right here, this sell that was happening right here, and we know that that was a part of a correction on a higher time frame. This happened January 25th. Let's go down to the 15-minute and look for entries. All right. Using our moving averages, the ones that I use are the 9 and the 50 exponential moving averages, EMAs. We were in a channel. We had a small rejection off this channel, and when my 9 and my 50 crossed here, I had a simultaneous cross down here with my MACD, and I could have entered for a sell. The first little push gave us about 100 pips, came back up and retested it. When it bounced off of it again, I had the same trading conditions. My 9 and my 50 crossed, my MACD crossed, and we could just work our way down this downtrend, and we could find those entries over and over again. Okay, you got a 9 and a 50 cross here, and a 9 and a 50 cross here. And if you notice, it's never taking out our previous high. Okay, you had a deeper correction. Anytime you see a deeper correction on a small time frame, it just means it was due on a higher time frame. So we're still looking for our sales because we are in a seller's market on a higher time frame. Just remember, the 15-minute is for entries only. We do not trade off the 15-minute. We're just looking for multiple entries to sell because on the higher time frame that we identified, we are in a seller's market because the market is staying below the trend line. Okay, now we finally got a break out of our trend line. We are no longer in a seller's market. If you look down at your MACD, you see a big cross to the upside, and your EMAs also crossed. So how do you know that this sell market is over? Your trend line broke, your MACD broke, you had an impulse correction, then it continued to the upside.
GG.
All right.
GG. Where's the impulse and correction? Right there at the end where you said there's impulse correction and continue to the upside. Where's it at?
It broke out. You got an impulse correction, then it continued to the upside. Now look, we're looking at a smaller time frame, and so it's not going to be as dominant, right? You see that impulse correction, continuation, it corrected, and now we're all the way back at the high. Remember, this sell was just a correction because we are in a buyer's zone right now, all right, on the daily market. So let's go back to that 15-minute and see how many pips we could have caught on that just by using the moving averages and the MACD cross. Okay, it started up here. We could have entered 1, 2, 3, 4, 5, 6, 7, 8. We could have entered 8 times, and we could have made, from entering here and staying under that trend line, 378 pips. All right, and you could have stacked at each one of these entry points, and you could have moved your stop loss up each time it broke and went down. Move your stop loss up to the next break. So if out of 378 pips, you had about 7 or 8 times you could have gotten in this trade. Even if you got in this last one down here at the very bottom, you would have gotten 90 pips. All right, does all that make sense to everybody?
Yes.
So I covered how to mark it up. It only took me about 30 seconds to mark it up. I find my current trend and I look for entries. So right now, like I said, we are in a buyer's market according to the daily time frame. But the only reason I would not be looking to buy is because of two things. All right. When you are down here at the bottom of your trend, your most recent low, this is a demand zone. This is where buyers take control of the market. So if buyers take control here, what do you think takes control up here where we're tapping out? Sellers. So I would not buy this market because you could see a reversal. Because the last time it reversed, looking at our supply zone and demand zone, the last time it reversed, it came down over 900 pips. So unless you're willing to have a 900 pip stop loss for a buy, I wouldn't buy this market unless I saw an aggressive break to the upside. All right, so this market right now is tapped out. Is look left. This buyer's market is tapped out unless we see a break to the upside. And if you look here at the way it moves, every time you see an impulsive red, you see a correction. This time when we see the correction, we could see the break that we've all been hoping for and move to the downside. But with Brexit pending, if GBP gets good news, we could see it push up. Now to find out where it could push up to, you just go to a higher time frame and look left at the next and support and resistance area. And this is way up here. If this broke up, we could get, excuse me, everybody knows it's ForexNChill and I'm always sitting in my bed or on my couch with no mouse. If it broke up here, our first area would be 326 pips. Our next one is 1,000 pips. So again, this market can move either way right now, to the upside 1,000 pips or to the downside 1,000 pips, depending on what happens with Brexit. So this is a pair I would not trade at this time. And swing traders, we go for 200, 300, 400, 500 pips because we trade mostly on a daily time frame. All right, before I hand it over to someone else, does anyone have any questions?
I got a question, Gigi. When you said about stacking, how do you go about stacking? Can you show an example of that?
Yeah, just like I showed each one of those blue entry points.
Yeah.
You could open a new position. So let's just say you open a position. I'm just going to make up. Let me go to 15 minute. If I open a position here, and then I move down to here, I could take partial profit from this position and open a second one here. Move down to your next entry point. You could take partial profit, open another position. The one position you want to leave running the whole time is your upper position because this is where most of your money is. And you don't want to overtrade. So if you have like a 1.0 here, you don't want to put a 2.0, a 3.0, or 4.0 because if this market reverses on you, you're going to lose your money plus give back more than you had made. So if you open like a 1.0 here, you can get down here and close 0.75 and leave 0.25 running and open another 0.25. When you get them down here, you can close this 0.25 and you got money, open another one. Get it down here, close that one, open it, and you got another one, and just ride it all the way down. Does that make sense?
Okay. All right. I got you.
Lose, you can, whichever one you want to be, your 9 and 50, that's up to you. You can make it any color you want to. My 9 is blue and my 50 is red. All right. So that's basic market structure. Again, if we look at, let me try and find my whiteboard again. The notes that I made. That's market structure. We identified the overall trend on our monthly, weekly, and daily. And then we went down to the 4 hour and marked off some support and resistance. And we took our entries on the M15. And the only thing I used was trend lines and horizontal rays. When I used the rectangle, it was just to show you, you could use that for your supply and demand zone. All right, anybody got any questions?
Gigi, how would you use the 9 and the 50 to determine where to get out of that trade or when to cash in some of your, what do you call it, position or a partial position?
And the M card is at default setting, confirm.
Gigi, we can't hear you. So if you're
Yeah,
talking,
I am
we can't
talking
hear
my
you.
butt off. I had muted it because my granddaughter's screaming and excited, but I bought her a racetrack today. And I bought her some little cars. So she's excited around there. Let's go back to that area and find that zone we were in. I thought I had taken everything off, but I guess I didn't. All right. This is the little cell area I think we had identified right here. All right. Let's take it back to R15 and go back to that date. All right. Again, whenever the 9 and 50 cross and the MACD were crossing, we were entering trades, and this is where we started entering because we want both conditions to be met. We want the red, my red is my 50, and when it's on top, I'm in a sell. Okay, so I'm in a sell market. My red had crossed on top and my MACD had crossed. I sold. I got a correction. When it got back up here again and those same two conditions were met, my red is on top, my MACD's crossed, I sold. My red is on top, my MACD's crossed, I sold. Whenever you're seeing this blue and red going in and out, it's consolidating or correcting. You don't want to trade. You want to wait until they cross and start splitting. You see it sold off here and it got to here, which was 123 pips. It pulled back in and consolidated. And whenever you see it splitting and the red is on top and your MACD is strong to the downside, that's your sell. All right, and we had about 7 or 8 of those on the way down. When it's doing this sideways movement and the trend lines, I mean the EMAs are together, it is correcting or consolidating. Okay, we only want to be in the impulsive moves. Okay, is Eric on here? Eric, have you?
Yeah, I'm on.
All right, guys, I'm gonna let Eric share the screen and I'm gonna let him tell his experience with Forex. He's been trading about 2 months.
2 months.
And he's made more in the last 2 months than people I know that have been trading 2 or 3 years. So let me stop my share. And I'm gonna give it Eric. Eric, you can introduce yourself, tell us about your Forex journey and mark us up a chart.
Okay, sure. Okay, I started Forex basically because my wife is she became disabled, and we could have lived off my income, but she likes shopping. Yes. And she, in the background, she just said yes. And she likes doing things like other people do. So we were. I said, well, I got to find a way to make an income other than my income and my VA disability. So I got it. I did the stock market, and the stock market's okay, but the money is not. It takes longer to make money in the stock market than it does Forex, because one is trading at 5.3 billion, where Forex is trading at $5.3 trillion. I started out, and everybody said don't do US 30 as a beginner. Well, I'm hard-headed, and I felt like I could handle US 30. So the first, I think it was the first couple of weeks, I played around with US 30, and then I had 1 week where I made, one day where I made $2,400 US 30. And so my experience with Forex, if you're not in Forex, if you're on this call and you need a way to make extra money, or you just don't want to work for someone. And that's my goal. My goal was set when I started December 31st. I told my boss already that on December 31st, I'm done. I'm going to the house, whether you like it or not. And he said, well, if you can do that, do it, because we're good friends. So if you're looking to find a way to make a living, just trading, Forex is the way to do it. Another thing is, when you're doing Forex, don't be greedy. If you make your pips, go ahead and set, when you got your game plan set, make the pip amounts that you want, and then get out of the market. Don't be greedy on it. If you make your 5,000 for the week by Wednesday, don't go back in the market on Thursday and Friday and say, I'm gonna make more money, because your mindset's already messed up. You're already looking at, you're gonna lose that money. So I've been trading gold this week, and gold's been doing pretty good. So I'm gonna mark up gold for you. I usually start on, I look at the monthly to see what my overall trend is. Right now I'm at a sell.
Hey, Eric,
Yes.
that's silver.
Oh, gold's right next to it. I'm sorry.
No problem.
Oh, and he's
Thank
been
you.
trading silver too, so that's probably
Yeah,
why.
I've been trading both. I'm sorry. I've been looking at these other ones, but I've been
Look,
trading.
I got him into Forex, but I like it because he's inboxes me, hey, I'm looking at silver, and I'm like, oh, let me look at it.
Yeah.
So let's look at gold right now. What I usually do is I'll go in and I'll mark up where my recent highs and recent lows were. And there's my recent highs, recent lows. I'll drop down to the week, and I'll look at it. I say that I'm in a actual buy right there. Then I'm gonna go to the daily. Now the daily is where I'll actually put my first trend line. I don't know why mine does that. I don't have the maiden on. So I'm gonna mark my trend line. Then I'm gonna drop to the 4-hour. And you notice when I mark up, I take away my my MACD, because I don't. It's just in my way. To me, it's in my way. I want all the screen that I can use. You know, I can get tighter. I want to get a tighter. I want to box in this price with still in a buy. We go to the hour. Now on the hour, I'm gonna leave it where it's at. I'm not gonna mess with it anymore on the hour. So now I know I'm looking for buys. Sooner or later on that hour, it's gonna come back into a sell, because it's getting ready to drop back into a sell on the hour. But we know that we need to focus on the fact that in the overall market, we're still in a buy. So you don't really, even though I'm on the hour, I'm going against the trend, because it's getting ready it'll be coming back down for a sell. And the only reason I do that is because I'm a position / swing trader. And within that, like Gigi said, I'm looking to get between 100 to 400 pips, and then I'm out. But to get that 100 to 400 pips, I could be in a trade for 3 weeks and never come out of that trade. And all I'm gonna do is add new positions on that trade. So then I love the 1 minute. I'm always jumping on the 1 minute, and I'm looking for a position to get in. Well, I'm looking at right now, this is going to come back for a sell. So what I'm going to do is I'm going to come, it's still on the 3 minute, it's still in the actual buy. If I come to here on the 5 minute, that is actually going into we're looking at it as going into a buy. It ain't made it into the buy yet. So what I'll do is on the 5 minute, I'm gonna take and mark this, and all I'm gonna do is wait for it to cross this trend line. When this crosses this trend line, I'm in. Now, one thing that I do, say if you look here, this is a overall. I'm not going to mark that as, I'm not going to mark that tight. I'm just doing this as an example. I know that this is an overall buy. So being a buy, I only want to buy at its low points because, but in this in here, you see on the 5 minute, we're going to ascending channel. So we're looking at for it to reverse, but that reverse wasn't a big reverse. So I'm gonna keep on buying, buy here, I'm gonna buy here, and the only reason I just focus on buys. Now unless that the only time I'll do a sell in a channel is if that channel is like this. That channel is 400 pips, right? So then I know that it's worth me risking to come up here and sell down as far as it'll sell down as far as it'll sell down. So I could actually bounce from one side to the other until I get to my high point. And I'm making all this profit I've made between the market structure turning from a sell to a buy. I've made my pips. So if it turns, I can risk losing 20 pips because all that profit I've made between here and there. Do you get that? Everybody understand that?
Yes.
So in that market is
You
worth
made
it.
your money, so a small loss won't hurt you.
No, a small loss. I don't care about that small loss because I've made my money. Matter of fact, at 900 pips, I've made my money for the week. More likely, I'm gonna take a nap for the rest of the week. I'm not gonna go back into the market. And like I said, some people just get greedy with it. And here, I'm in an overall sell. So I'm just selling from the top. From the top is all you're doing is selling from the top. Top, 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 and you sold it all the way down.
And are you focusing on only certain pairs, or do you trade whatever's moving?
When I mark up my 25 on Saturday, I have a book. Everybody get a binder. I'll get you a 5-subject notebook. I have a one that's a big one for all of my notes, and then I have a real small one that's still a 5-subject, but it's like one of the half binders. And in each week I have the week on top, and then I'll write in, here's the only pairs I'm gonna focus on this week, and I'll focus on those pairs for that week. And that is from a markup of, I'm gonna give you an example of that. Let's say we were going to do GCAD. And when I told you I marked up my support, my demand zones and my supply zones, a lot of times I'll look for pairs that are really close to the top. If it's in the middle, I don't even mess with it. But if it's close to the top, like this here would have been here, like this would have been here, I would have wanted to get in there. And these are the ones that I like playing with because they're getting ready. I know if it's at the top of that zone, it's going to sell off. It's going to sell off. And so on that sell off, that's 1,600 pips. If I could get in up here and I can hold that trade all the way, if you look at on the lower time frame, let's see what that date was. Let's see, March the 30th. On a lower time frame, say the 30th. What was that time frame, GG? What was I looking at there?
You were looking at the high on the weekly.
Oh, that's 18. That's 2018. That's
It
2018.
might not go back that far on your lower time frame.
Let's see if it'll go back on the 4 hour. I'm just trying to give an example. Nope, it didn't go back. But say if I go to a lower time frame, I'm here on the 4 hour, and I'm able to get, if I'm trading from the top of the zone, I'm able to get positions in the market before it hits the top of this before it hits to the bottom of this zone. I got 1, 2, 3, 4, 5, 6, 7 positions in, and more than likely, if I hit this one, and remember, if I did this one at a standard, which is 1, this is going to be 50, 50, 50, 50, 50, and 50. And the reason I never set another standard to the bottom is because, just say I got my standard up here and I'm doing 50s. Say this market all of a sudden reversed on me, and all of a sudden my free margin goes into the negative. The first thing they're going for is here, because this is in profit. And the only reason they do that is so that all of these here is going into the negative. They're going to put your actual money down low, that you will actually lose money off the top. And then, so that's when they close that one. And then they're going after all of the rest of these until your free margin is cleared and you're back into the positive. So never over trade. Always do a smaller lot size. If you don't feel comfortable with 50, do 25, 25, 25. You can even get lower as you go down. You get to 20, 20, 20. That's a not being greedy factor, because being greedy will cost you in the long run. I saw a guy who was up on a trade $3,000 from the top. It reversed on him. He had $1,000 in his account. He was up to 4,000. By the time the trade was over, he had $800 in his account, because he didn't know proper management of his resources.
So you would say that risk management is what has saved your butt, so to speak, in your account?
Yes, it has. It has saved my account many a time.
And you started with only $400, yes?
400, yes, 400.
And ended up having 2,400 on 1.02 on US 30?
Yes. And I've hit my 5 figures. And I've been trading for 8 weeks.
Yep.
It's been 8 weeks, yeah.
Yep.
So I've hit my 5 figures in 8 weeks. So as my goal is
5 figures in 4 weeks, but
what now?
I said I think you hit your 5 figures in 4 weeks. So you're high.
I probably did, because what I do every week is, and I never want to risk all my money that's in my account. And so what I'll do is I set myself later on I'll put more money in the market, but I'll take and put $1,000 in the market every week. And I take all my profit and I'll put it into my Hugo's Way account, the web account, not the MT4 account. So I'm stacking that account.
So the money that you're making, you're pulling it back into your wallet so you don't have it at risk.
Yes. Yes, because if I can make $2,000-$3,000 a week, once I get it to about 25, 30,000, then I'll bring a 10,000 into the market, and then I'll work with that. That's my goal, because I want to be way up on the market
All right, sounds good. Sounds like you got that risk management under control, which I think is the biggest problem of a lot of people. All right, thank you, Eric. Thank you, Eric. Thank you, Eric. And
You're
good
welcome.
luck. I know you brought your daughter into this and you're getting ready to teach her how to trade, and I
Yeah.
think your wife too.
Yes. My daughter, I don't know if she's on tonight or not. She said she's gonna be on. She hasn't got on yet. She'll be
All right,
on
guys,
later.
as you see, risk management is what has allowed him. And a good thing, you know, when he joined my team, he had never traded before, but he was familiar with the stock market. But he's practiced the principles of just following the market and going with the trend of the market, and also using proper risk management. And he has made a lot of money. All right, I know Jamie is over in Saudi Arabia. Are you on tonight?
Yes, ma'am. Good morning, good evening, good afternoon.
Morning. Can you take about 10 minutes and mark us up a chart
Yes,
and
ma'am.
tell us a little bit about your Forex journey?
Great. Hey, good morning, everybody. This is Jamie right here in the Kingdom of Saudi Arabia. And I'm going to, all right. Well, hey, I'm going to tell you something, right? I've actually been involved with with IML and in Forex since January of last year. And it was a struggle for me. The struggle was, bottom line is, I thought I knew all that and then some. One thing I can tell you is that the Forex market is a humbling experience, and it will put you in a position to be like, wow, I need to be coachable and I need to be trainable. And in order to be coachable and trainable, you have to go ahead and submit yourself to a mentor. All right. The platform that's provided to us is remarkable. But when you look at the platform, sometimes you just need an extra push. You need that extra guidance. It's just like getting a tutor if you're in school, right? And when you have a tutor, that tutor is able to show you things a little bit more in depth, down to the micro, if you will, than your regular teacher would. So I was fortunate enough to be able to reach out to a six-figure trader who was able to put me in a position to go ahead and spend that quality time with me. Now, over a course of last year, I had some ups and I had some downs. Unfortunately, I had more downs than ups. So if you could relate to that, go ahead and put a 111 inside the chat box. All right. Yeah. Okay. Good. That's right. Exactly. So we got some, we have more downs than ups. But when you get a mentor, ladies and gentlemen, I can guarantee you this, that your trading experience will turn out to be more positive than negative. Now, with me being here in Saudi Arabia, unfortunately, sometimes my internet doesn't want to work as properly as it needs to. So we're going to go ahead and try to work through this technical difficulty. All right. But going through this, actually beginning to getting to that mentor, my trading experience has turned, and that actually happened recently within the last 8 weeks. And I will definitely tell you, in receiving that mentor, it turned my trading inside out, where I can honestly say yesterday I was able to pull out over 123 pips out of the market yesterday. Well, yesterday for me, today for you guys. And looking at that, all I could do was just sit back and just look at the laptop and be like, wow, that just happened. And the simplicity of it was actually phenomenal. Gigi, you may have to come back to me a little later because for some reason this thing does not want to load up. So I don't want to hold up anyone else, or I don't want to hold up the group's time. So let me work through this technical difficulty. I'll go ahead and stop sharing, and then I'll just send you a private message to see if you can come back to me. And if not today, then maybe next time I can go ahead and share my results and the way I mark up and show those magic word called divergence.
All right, sounds good. Hey, Andrew, are you able to share with us tonight? I know the team has heard his story, and some of you saw it on Facebook. Andrew's story is one that will practically bring tears to your eyes because he faced the struggle, but he definitely came out on top. He didn't give up. He stuck to the game, and his life is forever changed. I know he told me he's got some children in the house tonight, but You know, all of us, it's Friday night Forex and Chill. We all probably have children or grandchildren around at some time. If you're able to, if you don't want to mark up a chart, if you want to just tell us a little bit about your success with Forex, and then we'll let someone else mark up a chart. It's up to you.
All right, you can hear me?
Yep, sound good.
All right, I just went outside. That's what happened. My name is Andrew Maxwell. I started Forex about a year ago. Like I said, like he said, it was difficulties at the beginning because when I got in, the person that signed me in didn't plug me in with the right people. He just wanted the residual, just left me be. So what I did was took advantage of the tools and started studying, but I got a little bit ahead of myself. It was trading at the same time. I was making money but losing money, but obviously I was losing more than I was making. So what I did was I was getting discouraged and stuff like that, but what kept me going is that I met Stevenson Lindor and Gavin Roberts, one of our uplines in here. And when I first was talking to them, they told me to hang in there. If you want different, you will hang in there. You know what I'm saying? So I just stuck that with me. Then I got into a little hardships because, you know, once your life starts getting better, that's when the devil start coming at you more. And I got a little hardships, you know what I'm saying, to the point that I was homeless for a minute by choice, but I had to clear my head. You know what I mean? I was sleeping under the stairs at a hotel. And at the same time, I was just thinking and getting my mind right, getting my passion stronger, you know what I mean, things like that, getting things in order. And then I was talking to Miss Geneva Ramos, which is on the line right now. And then we just started talking. She asked me why I wasn't making money, you know what I mean, what's going on with my trading. Then I just, you know what I mean, opened up, something just said, open up to her, told her my situation. And right then and there, she didn't go, oh, well, I hope your situation get better. She just came at me. It was like, yo, it's things like that. People went through this too. I'm going to help you. She was like, just stop what you're doing. We're going to train up. So when she trained me up, it only took her like 30 minutes to get me right. Because like I said, I was doing the videos. I was doing using my tools. But I had nobody to structure me, to tell me what I'm doing wrong, what I'm doing right. So when she got me right in November, I took a $140 account, and that was at 5 figures at 13,000. You know, so good things like that. My best day was last week. It was what it was, 1,700. So
wait, back up. You said you took $100 to over like 13,000.
Yeah, remember when I told you I got 140 to start up?
Woo, y'all hear that? Y'all, this guy, he called me and all he had was $140 to his name, and he did not want to take it out of Forex. And I was like, get your butt somewhere and get on the internet with me right now, because we're not going to let you lose that money. But anyway, I didn't know you had gotten it up to 13,000, but go ahead. I just had to stop you there.
Yeah, you know, so right now, actually today, if it's not past 12 o'clock yet, it's not, but it makes my year. And last week when I had quit my job, it was like, I don't need it no more, because what happened was when it was after I made that 17,000, that same day I went back to work. And I worked 10 hours, and you know how much I got after taxes? Because on the eBay app, it tells you. I only got no more than $80 that day. So I thought about it, 1,700 I made just in a couple of hours, maybe 2, you know what I mean? Sitting at my home, looking at a chart, feeling good, or going to work for $80, breaking my back, taking boxes off a truck. I think that was simple math for me. So what I did was I went there, I was like, I don't need this no more. Thank you for your opportunity. And I didn't get back a week. And right now, I'm focusing on my marketing side, building my business bigger, and just taking it to the next level. So that's my story.
That is crazy, y'all.
Wow.
I mean, I remember the day I talked to him, I was like, Andrew, I said, that movie, The Pursuit of Happiness, is a true story. That man was homeless and sleeping on the bathroom floor with his child because he believed in the skill set of trading, and now he's a multimillionaire. And I was like, you can do this too. And I remember he said, I promise you, I'm going to be one of your greatest success stories. And I didn't hear from him for a couple of weeks. And then next thing I know, he's like, hey, I had a $500 day. I'm like, what? This dude had went from like $140 in his account to having $500 days to now having like 4-figure days to being able to quit a job. I mean, who's going to work 10 hours for $80 when you can make $1,700 with the skill set that nobody's ever going to be able to take from him? And I can tell you one thing we all have in common. We all trade nothing but market structure, basically naked trading. We don't use indicators or any magic potion or anything like that. We're using our eyes to guide us. So I don't know if you know the history behind Forex, but Forex is decades and decades years old. These people who make these moves in the market, they never look at a chart. They never look at a trend line or a MACD or a moving average. The only thing they look is over here to your right is a price. They value a currency the same way a real estate agent values real estate property, and they deal with it at retail and wholesale prices, and they buy and sell at those prices. So that's why these indicators really aren't that valuable to you. We just use them to try and figure out what these guys are doing behind the scenes. And that's why a trend line is one of your most important friends, because as we showed before, when it's above the trend line, it's in a buy, and when it's below the trend line, it's a sell. And as you can see here, when it's in a channel, you got buy and sell opportunities each way, and it doesn't look like much. But as Eric was showing, if you trade from zone to zone, you can get 600 pips each way just in a really nice channel. All right, we have Miss Mahogany on here. She did a great job leading us a few weeks ago. And I'm gonna ask her to tell her story and mark up a chart using market structure the way that she uses it.
Hey everybody, this is Mahogany. How y'all doing in here?
Well, good, ready to learn.
Hi, Mahogany.
Hello, hello.
Hello.
Hi, Mahogany.
Hey, how you doing, Miss Gail?
It's Sinitris.
Oh, Sinitris, I'm sorry. Hello.
That's okay.
Sound like Miss Gail. I'm like, yeah, Miss Gail is on here. Okay, I just
yes, ma'am.
Okay. I wanted to get everybody's energy on here because being on here is something that every Friday night is definitely not just a commitment, but when you put in those hours later on in life, these Friday nights will definitely pay off and are definitely paying off. My background, I worked in banking. I know what banks do. I actually ran some branches, and in running branches, I know what they do with money. I knew how money worked. I was making for the bank $50,000 a month. And it was just like after so many years of doing that, working for other people, it was just, why am I making them all this money? I've been working in sales, so I knew exactly how that goes with them. In working with sales, I'm just pounding the pavement. I'm working for somebody else. And how could I do what I do really well, but do it for myself? And actually, when trading came to me, I was trying to build another business, and I said no. And then while I was trying to build that business, it was like, I need income. So why am I telling this opportunity no? And I heard the opportunity coming from somebody named Dr. Calendar, and she made a comment, which I have found myself in, that really spoke to me. She was like, if you're a grown person and you ain't got $200 in your account to start this business, you really need this business. And I was at a point where I'm trying to run this business, sinking all of our money into this business, and we didn't have that. No matter how successful I had been, no matter how much money I had in my bank account before, in that very moment, I qualified for that. So when this came along, it was something that I went hardcore at. I did 90 days of no trading, just learning. What's her name? Adeze, she was in my head. Adeze was the person I went to sleep with, woke up with, learning how to trade. Then I found Lee Allen. I learned pivots with her. I made some amazing, amazing progress with her. All the while I was following Dr. Kathy. Dr. Kathy is the reason why I still trade today, because she made us get up at nighttime when the market was moving and showed us that while men sleep, the market is moving and people are making money. So when people are getting up and going to work, yes, when we getting up and going to work in the morning, because you know we have to get that quote unquote dollar, and we come home and sleep, that's when all the money is made. So it's like a cycle where you're sleeping when the money is being made, and you're getting up in the morning to go and make this money that really is not actually sustaining you. It's a never-ending cycle. So anyway, my story is I just wanted to be able to fund my businesses. And Forex is what's allowing for me to now actually invest in real estate. I have bought an oil well. And the biggest thing for me is that I have somebody, a partner that I can actually work with, and we trade together. I think that's the biggest thing. Have your support. You have to have Gwen as a support. Dr. K was in the support. We have plenty of people on here. Clint was a support. You have to have support. You have to be within your community. So for me, that is just my story. And let me show you, Gwen, I don't know what happened with Gwen, but Gwen just like all of a sudden, just like bam, she said yes to her vision. And as I was in her group, I start learning about the right way to trade, which is market structure. As you guys can see my screen, this is just how I mark my charts up. What I'm gonna do, something that Gwen said, is that when money is moving, we need to be aware of currency. So what I do every Friday is I go and I mark my currency up. So even though we have euro, Canadian dollar, what is the Canadian dollar doing? What is the euro doing? Because depending on what they're doing, maybe I may be trading that trade the following week. So I'm gonna go to the Japanese currency, and I'm gonna mark this up for you guys. So as you can see, I'm gonna start from top time frame of market analysis and work my way down. So this is my monthly time frame. I'm just gonna go in here, look for my most recent low. My most recent low is in this area. I'm just taking this little bitty, these boxes right here. And what I'm doing with these boxes is I'm just making sure that I get my most recent low, and I'm looking for my most recent high. So in this place, this is my most recent high. There is some information in the middle, but I'm not gonna worry about that. My chart for the month is done. Recent low, recent high. I go down to the weekly. Now I'm looking here, and I notice that there's a middle area where there is some price action being hit. When I say price action, that means the market is doing some kind of reaction in this area. And as you can see, since December 2016, it has not been able to push above this. Not until we had that little flash crash when the market actually went to complete its top, and it hit the very top. And because it hit the top, now it's making its way down. What I will do is I do definitely like to make sure I'm having price action or have my markups within price action. So I'm going to bring this forward a little bit. On my weekly, I can be done, or what I can do is take my trend line and I can mark where I see current price moving. Currently, the trend is going down, and I color code mine because I want to know when I look at my chart, what am I looking at? So this is it. This is my weekly chart. There are other little places that I can put information. Again, remember price action. If I look in this area, price is reacting here. So I can put like a little line here. I can, you can, wherever you see price reacting to, you can mark it up. But just to keep it simple, I'm just gonna do my daily next. And as you can see on my chart, price is starting to break up. So I'm gonna just change my candles here. I'm gonna go to my Hakanashi candles so that I can see all my information all together. And I'm looking here, and I actually can see a little bitty secret going on. And this little secret is going to be my channel, my ascending channel. Now, because I'm on a higher time frame, I really should not be cutting out all these little wicks. But since this right here is my Japanese yen, I'm doing the full currency of the Japanese yen. I'm not caring about that right now. So as I can see, since March of 18, we have been going a little uptrend, but recently it did a downtrend. And not only did it do a downtrend, when it got to the bottom of my trend line, it bounced up to what's called a pullback, and now it's coming down. Since price has held on this line for such a long time, I am going to assume and predict the market is going to go back up. If I stretch this out, I'm expecting this market to come up from this bottom trend line to this top trend line. So this is just my monthly, weekly, daily. I'm just looking at this chart. So I'm looking at my yen currencies. If I trade my yen currencies with over the next few weeks, I should be looking for buys. That may be the overall trend in the market at the time. Now, again, I say should. It may be because the market is going to do whatever it does. No matter what I mark up, I have to be open that the market going to react to news. It's going to react to whatever it wants to react. As long as I keep coming back to my chart to see what it's doing, then I'm good. If I go down to the 4-hour time frame, I'm going to see here that price actually did what Gwen talked about, which is, maybe make this thicker, impulse. This looks like a little bitty impulse. It came back down and it corrected to the trend line. And then I'm expecting it to go up in this direction. And I'm looking for it to break this line. This line right here, if it doesn't, it could come back down. But given the past and what the market has done, it's going up and down in this channel. This, at some point, may be breaking this. And this is, I'm only on my 4-hour, and the 4-hour is where the market is starting to tell me where to go. I can go down to the 1-hour and get a little bit more involved. And as I see all these flags. I see all these little things right here. I actually see that this right here on my 1-hour, that's why it's so important to keep on going on these time frames. If something crazy happens in the news, I'm seeing this impulse, this correction, all this stuff that I just sat there and said could happen. It is possible that this could go ahead and impulse, flag. Now, if anybody knows when you have an impulse, a correction, this is making a flag pattern, you might go ahead and fall down more and break. But you know what? Because we're in this little trend line, I just have to watch this to see what it's going to do. You have to watch. You have to watch and see what the market's going to do. The market could go up. It should be going up because of these trend lines, but I'm looking at patterns as well. So when you're marking up charts, you have to be aware of the fact that no matter what you mark up, what you're looking for is what the market is telling you that it won't do. This right here is telling me that it more than likely will fall down, but I have this trend line here that's saying it's going to keep it up, so I have to keep my options open. It hit the bottom of the trend line, so it should be going up. I got to keep my options open. I can't be locked in. I have to keep watching this actually. So for my yen pairs, and when it comes to Sunday and Monday, I'm really watching what's happening here for my yen pairs because I'm at a place where it should be going up or it could be going down. How I determine those things is I have my weekly trade notes. Gwen talked about getting your 5-ring folder. What I did is I like to use a computer a lot. I just did it in my OneNote. I have my goals. I have my trading plan. I have my success habits. I have my confirmations that I'm always using. I have little information, finances, my spreadsheet journal, time management, what I'm doing every week. And then every week I'm looking at what I created for myself as far as what the news is doing. For the news, yen, Thursday and Friday, we should have saw big movement in yen yesterday and today. Why? Because I'm looking at the news to tell me what's going to be pushed. And when I mark up my charts, I'm looking for it to push in a certain direction that I will only know because of what my chart markups say. And after I get through marking up my charts, what I'm doing is I'm taking what are the best possible trades for the week. I'll mark up maybe 10. A lot of times, whatever I did last week or the week before, it may be still something that's current. And what I'm doing is I'm focusing on those. I have 6 here. I really only focus on pound CAD and Euro JPY today. Why did I focus on Euro JPY? Because it told me that news was going to make this actual pair move. Pound CAD, if you saw it, Tuesday, it really moved. How did I know? Because I was looking at my news to confirm my pushes. Confirmations. I have my little confirmation checklist. I have to see an impulse on H1. I had to put my fibs on it and have it go to 6-1 Fibonacci. I enter on my wrinkles. I haven't gotten that down pat yet, so I do use my candlesticks, but my goal is to get the wrinkles down pat. But I enter when my my candles are actually crossing on the EMAs, and then also if my MACD is crossing. I have my ultimate take profit at the -618 because I use the Fibonacci. I'm taking profit at 50, 100, 150. That means in one pair, I can get 300 pips in one pair because I'm stacking. And I have my stop loss. Every time I trade, I have to use these confirmations. When I do not use these confirmations, I lose. I have proven that to myself a few times. And this is what I do to get in and out of the market, how I manage my trades. I have risk management going on in here. I have how I'm growing my account going in here. I have my confirmations. And again, for me, it is having a clear plan. What is the news? What pairs am I trading? If I go in a room and people are screaming about other pairs, if it's not on my list, I ain't listening. I used to do that all the time. I would hear people talk and I would go follow this and follow that. And then I wonder, like, why am I winning and why then am I losing? Because I hadn't marked it up. I haven't been following it. I'm not really focused on that 1 or 2 pairs for the week that is really going to move for me. So yeah, I think the biggest thing is having a plan. You have to have a plan. Mark up your charts. Like I said, for me, I have my red folders in here. So if it's not in my red folder or if it's not in my little watch list, I'm not looking at it. Even though I have all of these marked up, I mark up every chart. I do all my charts. But if it's not in my watch list, I ain't looking at it. You have to be disciplined. You have to be focused. You want to retire, it's like when you get up and go to work. You don't go into work and just do anything. If you don't do your work, you're gone. This is the same thing with Forex. If you don't do your work, you are just sitting there throwing money into the market. I'm not going to sit here and fund their dreams. I'm funding my dreams. And this is the only way that I know how, that's proven to me that I can continue to be able to do some investing in real estate, getting into some oil wells. If I sit there and I work my plan and I stay disciplined to it. And I hope that you've been able to get some kind of information from this. I hope that you guys are, if you have any questions, definitely let me know and I can answer some questions for you guys.
I got a quick question.
Sure.
Wow, that's beautiful.
Could you, as far as the Fibonacci, can you just pull one up right quick? I just wanted to see something because when I pull up my Fibonacci chart, or when I pull up my Fibonacci onto the chart, for some reason it's not going all the way over to the right. I just have it kind of like in the center. Can you just kind of pull it up?
Now you're gonna have to click on your settings. Show them how to do his settings.
Sure. And y'all don't know, Gwen is the Fibonacci queen. The reason why I know my Fibonacci is because Gwen was like, you got to do your Fibonacci. If you do not do your Fibonacci, I don't know what you're doing. So when I pull my Fibonacci up, first of all, I typically use my Fibonacci on my 4-hour. So I am going to take my Fibonacci from let me find something that's good. Say if this right here, impulse to impulse. So I have this move from the bottom and I'm taking it all the way to the top. So I took it from the bottom, swing low, I click, pull up, stop at the end of the impulse. To go and pull my Fibonacci all the way over, I simply click on my little setting dial and I go to style. On this little box, I can sit here and I can push extend lines. See if I keep it, if it's unclicked, it's all together and I can't see it. If I click extend lines, it pushes to the side. I can change my colors. I can do whatever I need. Since I keep it on there, I like it to be pretty dull. So I want it to be in the background. So when I'm looking at my Fibonacci's, it's over to the side. I say Fibonacci's. Fibonacci is over to the side so I can still trade without all the stuff on there. So on here, when this came down, most of it came down and hit this beautiful 618, that golden ratio. But look at this little fake out wick. It came all the way down and basically did a retest. This right here would have got a lot of people in trouble. A lot of people in trouble if they were looking to get in exactly at the 618, which is why you have to always go to your low. Even if you look at your Fibonacci, you have to go to your lower time frame and see what the market is doing.
Hey, Mahogany, point out to them where that extension went to, because that's a very important level too.
Oh, this right here? Well, I don't have the 8 point.
No, at the top.
Oh.
After your bounce.
Oh, okay. So when it went all the way up, we have this negative 27. These are part of the take profits that once it bounces back up and continues to go in the direction of the trend, these are actually take profit numbers. And if you saw, one of mine said take profit, well, that's my correction. So I have my take profit. This is my ultimate take profit at negative 618. That means that I have my last entry. I'm going to hold all the way up to here. And that's 440 pips. That may take longer than a week. But this right here was my ultimate take profit. This is where I'm ultimately trying to go to. But also I have to look and see my lines. This needs to be drawn out some more. I need to actually pull this out so I can see if that's something that can be done. And it probably won't. It probably won't reach that. But you see that negative 27? That definitely got touched. This right here.
Those are your Fibonacci extension areas. Anything out your 0 and your 100 is an extension area. But those are important for your continuations of your overall move.
Yeah, see Fibonacci, Queen. You guys, in our Telegram, there's a Fibonacci tool, tutorial that Gwen put in there. I suggest you guys go and watch that. Like I said, Gwen is a Fibonacci queen. This is one of the reasons why when I don't use my Fibonacci, I typically get kicked out of the market because I'm not realizing how far a pullback could go. This is definitely letting me know how far a pullback could go and how far the continuation is more than likely to go. If you look here, like Gwen said, as we go down to lower time frames, this impulse up all the way here. If I look here, I have all these little, this blue information. I hope it doesn't look too sloppy. This blue information right here is a zone area. But I knew that with this yellow line, even though I'm within a zone area, I knew that this yellow line was something that was keeping market down. So if you guys look here, I knew this was all done before any of this was even here. This little yellow line, I was hoping that it would keep market down. It actually burst past it and it did come down. So this is how I know that the market is still making its further up moves. It's causing me to move my trend lines up and up. And again, as we said, we saw that this was going to an ascending channel. I hope I answered your questions with the Fibonacci, whoever was asking me.
And I think Crystal was saying she has a question.
Okay, Crystal.
Yeah. So I'm a very simplistic person, and Fibonacci and like a lot of the markups on the chart kind of distract me. So I'm wondering, like, what is the most basic or simplistic way to look at the chart and still get the same information? I'm even okay with using the moving average and the exponential moving averages, but sometimes when I see like a lot of different colors and rectangles and triangles and all of that on the chart, it kind of confuses me. So do you feel like I could still get the, I guess, same accurate results without using Fibonacci or without drawing rectangles or shading up the chart?
You definitely could. I'm just going to tell you, when you know the power of Fibonacci, you start to use them. Because I mean, even when you look at it with your eye, when you put Fibonacci on it, that's confirmations. Before you get in any trade, you need confirmations. Fibonacci help with confirmations. You don't have to leave them on. You can take them off if you need it. Like when I'm using this chart, if you want something simple, most recent low, most recent high, weekly, it's currently going in the uptrend. I'm expecting for this to go all the way up here. Daily, I'm at the middle. I'm at the middle. So that means that this could push down, or it can still go up. I mean, I can just do this little simple thing, but for me, I know that there's all this structure going on, and I could, on this big time frame, put Fibonacci on the day time frame and take it from my swing, my top of my impulse all the way down to the lower part of the impulse. And I mean, if you want to play the market with just this little few markups, you could sit there and take this, probably buy it all the way up to your 61.8. This is the day time frame. It's very minimum marking to your 61. That's 400 pips. I mean, you can make this as simple as you want to make it. For me, I'm so used to looking at my smaller time frames, and I have all these little places because I know that if I go, I can't get 300 pips in one sitting sometimes, depending on the actual pair. So I'm letting myself know, okay, Mahogany, you can only get 50 pips from here to here, or that's 87 pips, because look at the structure area. So I will put a line on it in a quick moment to let myself know I take profit down here. But as you can see, I just did this on the daily. I put my fibs on it, and I just have 1, 2, 3 things on my chart, and I have a swing low to swing high to swing low, and I can take this. So it can be as you want to. If you don't like using these blue lines, I'm going to remove all my tools. I'm going to go to my monthly. I can just simply put this like little horizontal ray. I'll put it there, and then I'll put the horizontal ray right here. Go to my weekly chart. I see that maybe my horizontal ray needs to be right there. When I look at this, I see that market was really bouncing off of this area. And then maybe it may continue to bounce up in here, but up and down. So this right here, if I go to a lower time frame, look at my 4 hour, I'm really seeing a flag here. I'm seeing impulse, correction. So if anybody knows what may be happening, it may be time for another impulse. It may break this line. So, I mean, I have very minimum on this chart. You can do very minimum. Whatever your eye needs, you can definitely do it. I would just say when I have minimum, I'm definitely playing higher time frames. All this other stuff means that I've just been doing a whole bunch of work, and this is like old markings, really. Does that answer your question, Crystal?
Hey, Crystal, let me ask you a question. When you mark up, what do you normally use as your tools?
So, okay, I honestly, I'm still kind of new, so I really only use support and resistance. And I have been, like looking at the tools. So the two things I found that work for me are Oren's Rinko, I think it's what it's called, chart, and Luke's basically break and retest, which seems to be what you guys are talking about here with the impulse.
So what you're trading, and yes, we all use Rinkos, but we don't use it to explain simple market structure to new people because you have to pay for the upgraded versions of TradingView to get Rinkos. What Oren does isn't market structure. He trades supply and demand mostly, where they just draw your most recent supply zone and your most recent demand zone, and they do the W&M formations and the retest and breakout. I think Kim Torres trades the same strategy. Do you mind if I share my screen, Mahogany?
Sure.
Okay. So basically what they do, and not because I've followed a little bit of everybody, and Orrin usually, he had always mostly traded on the daily, but recently I've seen him using the 1 hour a lot. He would mark his zone here and his zone here.
We can't see your screen.
Yeah, the screen, Gigi.
I clicked share. Goodness gracious. Let me click it again. Hold on.
We're going to get a mouse and attach it to your hand.
No, it doesn't have anything to do with the mouse. I clicked share screen. I guess she hadn't unshared hers yet when I did it. All right. All right, I took everything off. Let me get my naked right here, and right here. And this is the way I know that Kim Torres teaches also. She usually does the weekly, and he usually does the daily, but I've seen here lately he's been doing a lot of the 1 hour. But they'll identify the most recent high and the most recent low. Get this off here. And here's another area, like right here. They have a break and retest, and he sets like, he would have set like a buy limit here. And when it retested and your buy limit hit, you would have caught like 290 pips. So that's what she's talking about. This is trading supply and demand zones. This isn't really market structure because they're just trading like double the bottoms and double tops. Like here, where he said it hit it, you get a break, a retest, and then he would have a sell limit here, and it would have sold off like 199 pips. For those of you who are in iMarkets Live, you can look at what he's doing on IML levels. It's free until April 1st if you go to Forex. And that's basically what they're doing. And I'll tell you why we don't trade that way. Okay, like there was a buy limit. It didn't exactly hit it, but if you had got in earlier, you would be up right here. If you had taken the entry, 242 pips in 4 hours. Okay, so that's all they're doing is he's trading the break and the retest. See here, it broke, it retested, and you would get in and buy. So that's what she's used to looking at. The reason I don't do this, you are looking at a 195 pip stop loss to get 400 pips. Where we trade, we get 10 to 15 pip stop loss to get 300 to 400 pips. Does that make sense?
That makes so much sense. That does. It does.
There is nothing wrong with this style of trading, but the way that we break it down to the 15-minute entries and the flags, I can catch this many pips with a far tighter stop loss. And just imagine if it hits your stop loss, I'm not willing to give up 100 pips to catch 200 pips.
Right, right.
So that's the difference in why we mark our hours up a little bit more in detail. And I know I saw his Renko strategy. He had it like on the 1 hour, and he's like, "Can you?" And I love Orrin. He's a great trader. It's just I like tighter stop losses. So he would be like, if you can count to 3, 1, 2, 3, you could have put this here, and then you put this here, and that is, what date is that? I got my tools in the way here. March 7th. You could go to candles, and you could go to March 7th. And you see it worked. You had a break and a retest, and you would have gotten your buy. That makes sense. And so you would have caught that trade based on setting a buy stop, and could have got a little over 100 pips. But they put their stop losses way down here, and that's why I could get the same trade with 10 or 15 pips. We jumped on a trade one night with a 2-pip stop loss. It's all about market structure and knowing when the market's getting ready to reverse. But yes, this is a great tool. And if you don't know how to mark up your own charts, tools like this, and like another great tool is the IML bounce back. It's really a great tool that has come out, and I see they had some oil and gold and crypto on there today, which was exciting. You know, tools like this are great for beginner traders. If you're using bounce back, I think we got Kathleen on here. She caught 500 pips 1 week trading bounce back. This is another great tool. But Jamie's back up and running. Since he's calling in from Saudi Arabia, I want to give him a chance to share his story in his screen. He shared most of his story. Hey, Kathleen, you still loving that bounce back?
Oh, I love it. That's my best friend. I'm the queen of bounce back.
Yes, bounce back pays the bills.
It does. Especially for new beginners, I recommend it to everybody. Because then you have time to study and learn.
And a lot of people have applied the basic bounce back rules to their regular trading and seen phenomenal results.
Yeah, the same rules. And then you see that way, then you can be able to understand when you talk about stacking, because you'll take a pair and then we all discuss it in the groups and I see what's going on, you know, for the ones who hold the trades, because you just move from baby steps until you get better and better each time.
All right, show us what you got, King Abu Nabi. No, that is Kathleen that was talking.
All right. Appreciate that. Sorry about that, guys. Had some technical difficulties. But hey, you know, I like energy. I like synergy. You know, let's go ahead and say market structure. If you say market structure, let's say market structure.
Market structure.
That's right. Market structure is your best friend. Market structure is your best friend. I tell you, market structure, I will tell you this right now, ladies and gentlemen. If you learn market structure, I will tell you this. There is nothing that you will need. I love bounce back. I love the bounce back. I love the gold cup. I love everything that IML has to offer when it comes down to the products. But let me ask you this one question. God forbid, but if something happens to IML, if it goes bye-bye, let's say Chris Terry said, you know what, I'm tired of playing. I don't want to do this anymore. I want to go with my wife and travel the world. Maybe, you know, get with the guy who makes the airplane that's turned into a spaceship from Virgin Records. And I'm going to just go ahead and leave. You have a skill set that can go ahead and still take care of you and your family, that you can teach your children, that can teach their children's children's children. We're not talking about one generation. We're not talking about 2 generations. We're talking about 5 generations and more. And that's what this skill set, and that's what Forex has to offer you and your family. All right. This pair right here is Gbp Aud. Now I want you guys to say Eagle Eye. Can we say eagle eye? Eagle eyes, and we're going to talk about some eagle eyes today, right? We're going to look at eagle eyes in an aspect. We're going to see what the market is saying, right? One thing that my mentor was telling me, and I had kind of a learning curve, was he wanted me to mark up 25 charts a week on 5 different time frames. I'm like, five time frames? It's like I was back in school. Well, in order to learn a skill set, you have to practice, drill, and rehearse. Say practice, drill, rehearse.
Practice, drill, rehearse.
And when you practice, drill, and rehearse, it's just like, you know, Michael Jordan, it's like Emmitt Smith, you know, they practiced, they drilled, they rehearsed, they were able to put themselves in a position where when they were practicing, when it was game time, when it was time to show up, you know, for the Super Bowl, they were able to produce. Say produce.
Produce.
So what you want to do is you want to produce in this skill set so you can keep your it in your face. Your it. I don't care if your it is your children, your mama, your daddy, your wife, your husband, your grandma, whoever it is, whatever it is, your it is, you keep it in your face. See, my it is my 2 daughters, Mia and Monet. They are my it. They are my striving force. So every time I come onto this market, you know, this $5.3 trillion a day economy, that it is at my face, because see, there's a war out there, and see, I have to produce. right? So keep your it in your face. This is GBP AUD. And as you can see, my it is making sure that I deal with this one pair. Ladies and gentlemen, I'm going to tell you right now, you can put yourself in a position where you can make 6 figures off of one pair. You don't have to bounce around to 50 million different pairs that the market has to offer. You can do this just on one pair. All right. So as you can see, I have my ceiling, I have my floor, and as I can see here on the monthly, I've already boxed in price. Say box in price.
Box in price.
Right. On a box in price, right? And see, that's the reason why these great boxers, they were able to cut the ring off and put their opponent in their corner and just beat the living daylights out of them, right? So right here, as we are here on the monthly, just think of yourself in an airplane and you're 30,000 feet in the air, and you can see the earth and you can see all the nice curvatures in the planet, right? But as you get closer, you can see better, right? So we're going to get closer. We're going to go down here to the weekly. And as you can see here on this weekly, we have a channel right here. This channel right here is just awesome. But I want to kind of share something else with you. I want to tell you that the market has its own language. The market has its own language, and that language is actually telling you what she is going to do. As Gwen put it earlier, the market moves in 3 directions. As you can see, we have impulse, we have a correction. So who can tell me, if we have a correction, what could we possibly be looking for?
A continuation.
We're looking for continuation. That's right, Mr. Isaiah Williams. We're looking for a continuation. So here we are looking for a continuation. But how about if I told you that the market can tell you where she's going and you don't even have to have an indicator up? Who would like to know about that?
Everyone.
Everyone would like to know about that. Well, you know what? I would like to know about it too. And what I found out that the market speaks a language. Let me go ahead and kind of make this a little bit small because I really want you guys to see this right here. Uh-oh, don't want to do that. Kind of put her back. Kind of bring her over just a little bit. Kind of scrunch her down just a tad bit. Now, I've actually been in this trade and been trading this for about a month now, Gigi. We've been playing around with GA.
Oh yeah, she's one of my all-time faves.
Yes. So in looking at GA, she is going to tell you she's going to do something. And I'm going to be very, very frank with you. Just looking here on the daily chart, the market is going to tell you what she's doing. As we said earlier, we have an impulse, we have a correction. And remember what I said, we're going to box in price. One thing about flag patterns is they tell you so much. You know, they have some gentlemen here that Gigi was just so gracious to introduce to her team. I call them the 3 horsemen, or the 4 horsemen, excuse me. And that's Stevenson, Lindor, and that's Terrell, that's Clinton, that's Mario. So these guys were able to change our trading to another level. Now, as you can see, there's this flag pattern, and this flag pattern is saying that it's going to go down. And you're going to learn more about this when you have a mentor and when you go and you work with Gigi, or you work with Eric, or you work with some great people here on the team. Now, this market is telling you every time it hits this specific zone, what is the market doing? Is the market going down?
Yes, sir.
Okay, so if you know flag patterns, you know market structure. Say market structure.
Market structure.
Market structure. Knowing market structure. Ladies and gentlemen, you could have literally, easily, without beyond a shadow of a doubt, pulled 600 pips in 13 days learning market structure. Now, who would like to go ahead and pull 16 pips out of the market?
Me.
All right. Only one?
That's it.
You said 16. I ain't trying to get no 16.
No. In 16 days, 600
Oh, okay.
pips out of the market.
I'm stingy. I want them all.
All right. Well, we're going to go ahead and take all the money. All right. But I want to show you something here, and I've been working diligently. I like the 4 hour. The 4 hour is my best friend, but I like the 1 minute even better. And Eric did such a great job talking about the 1 minute. But everyone has their own way of doing things in the market. Everyone has their own viewpoint. But one thing I definitely can say, because we're all unique, we're all different in so many different ways, but we all know one major key area. We know market structure. Now, as Gigi said before, we have an impulse, we have a correction, we have a continuation. The market continues to do the same thing over and over and over again. The market is only going to go up and it's going to go down. And that's what the market did here. But I want to show you something that totally blew me away. And I can actually tell you this actually happened to me. And it scared the living crap out of me. I saw this. I'm going to change this color. And this is what I've been trying to master. I was self-taught until there was somebody here in IML who actually teaches something called divergence. Divergence, ladies and gentlemen, is what changed the game for me in the Forex market. As you can see, price, is it going up or is it going down here?
Down.
Price is going down. But if we look here at the MACD, which the MACD shows you momentum. Say momentum.
Momentum.
Momentum. Isn't momentum going up?
Strong enough.
But the market is going what?
Down.
What is price doing? Going down. So if momentum is changing, but price is doing the total opposite, what are you going to believe? Are you going to believe the market makers who's controlling the market, or are you going to believe momentum?
The market makers.
You're going to believe the market makers? Oh, no, we don't want to believe the market makers. Because the market makers are going to take your money, and they're going to have you doggone snatch your soul right out your chest because you just lost the church's money. We want to believe what momentum is telling us. If I told you, if you would have took this trade because you learned market structure and you knew how to read the market and know and master divergence on the 4 hour, how many people would like to have over 500 pips in 3 days?
I would.
Now, let me show you the impact of 500 pips. If anyone has a calculator, take $10 and multiply that by 500. What do you come up with?
$5,000.
$5,000.
$5,000. I'm sorry, in 3 days, who would like to make someone's income for 2 months?
Me.
This is the power of Forex. This is what the market has to show you.
Hey, you got people on this call doing it in less than
a year. But one thing I like to do is I want to get really close into the market. So when we look at this and you learn market structure and you're able to box in price, there's only 2 places that it's going to go. It's either going to go up or it's going to go down. And when you can learn how to box in price and when you know what the market is telling you because you understand the language, ladies and gentlemen, you will break any form of generational curse that you have in your life. You will break any form of a generational curse in your family's life. You will be able to share this skill set and put it in a way that your family lives will change for the better. Because when we're gone and they tap that spade on our face and we're going up yonder or we're going down below, they'll have that picture over the fireplace and that little baby's going to say, Granny, or Granddaddy, who's that woman right there? And they'll be glad to say that that woman or that man is the person that changed our family's life forever. Ladies and gentlemen, this is Forex. This is market structure. Gwen, I want to say thank you for giving me the opportunity to present this on your platform. And I'm honored to be, working with you and everyone here tonight. Guys, I'm just a punk kid from the streets of Chicago. who came and said, yeah, I want to do something bigger and better for my life. And Forex is the key. I've done a lot of things in the past that I tried to go ahead and make a lot of money. This is the first time I was able to actually learn a skill set that can make a lot of money. So Gigi, thank you very much for this time and this opportunity to show divergence in market structure.
Good
Thank
job,
you
man.
so much.
Wow, great
Hey guys,
job.
really, there's a new instructor on iMarkets Live. His name is Jimmer, who teaches Divergence. Divergence is a very powerful tool. It shows you when there is going to be a reversal in the market. So if you want to watch him, his name again is Jimmer. He's like at the bottom because he's one of the newest instructors when you go to English Forex Advanced. My brother, he's been in iMarkets Live 1.5 years with me. He's not on here tonight. He's traveling, but the team knows him. For a whole year, he traded at 0.20 and he hit 6 figures. Well, recently, I was like, with your skill set and with your knowledge, I mean, your account's over 6 figures. Why don't you just increase your lot size? He just increased his lot size to a 1.0. And like 2 days ago, he had already made $16,000 for the month of March. So that's just, that's just to inspire you. That's not to brag, but, not only did I change my life by learning about Forex, but I brought my family into it and it's changed, my family's lives as well. So make sure you share this opportunity. I want to get one more person to come on. This young man, he was only 19 when I met him. He's 20 now, and he's like very disciplined and very structured. He marks up his 25 charts every week. He studies a lot. Someone asked earlier how long it takes to go ahead and start sharing your screen, Walter. Someone asked how long it takes to mark up 25 charts. It used to take me all day. Now I can do it in an hour, and I will just like Mahogany was saying, we weed out the junk. All we want are high probability trades. This is going to go a little bit in depth, and this is going to go over some heads, but the market moves in patterns. And if you watch Stevenson Lindor and you've learned about flags and channels and ascending channels, you will learn that there's always a pattern before a move. And we have 2 types of patterns. We have continuation patterns like flags and channels, and we have reversal patterns. So Walter, he was 19, just turned 20. I'll let him introduce himself and tell a little bit about his Forex journey like everyone else did and how he came to be here tonight. And then he's going to explain some of these patterns to us. In fact, I just reached out to him. I'm like, are you on my call? He's like, no, I'm doing homework. I'm studying patterns. And I'm like, get your butt on here, okay? So here he is. Here's Walter.
Hey, good evening, everyone.
Evening.
Hey, Walter.
Hey, Walter.
We're getting ready to be taken to school by a 19-year-old, 20-year-old.
Yeah.
Right. So a little bit about myself. I started this journey in and out, I want to say sometime in like late September. And I'm going to be honest, I was being half with it. I wasn't really applying myself, but I noticed when I started to apply myself that I see the same things over and over. And this is not like, you're going to get rich tomorrow or something like that. That's not going to happen. You actually have to put in this work. So I have a full-time job and I come home. I get home like 5:30, 6 o'clock. On the school night, I get home like 8:45 or 9. And I stay up to about 12, marking up, and I go to sleep, and I wake up at 6, and I go to work, and I repeat. And now, well, actually, that's what I was doing. Now that I'm live, I actually come home, and I go to sleep at about 10:30, and I wake up at 2:45, and I just stay up till it's time for me to go to work. So you definitely going to have to put the time in, and it's no excuse. You're going to make time for what's important. And this is important to me because I definitely wanted financial freedom at a young age and to be able to create some generational wealth. So it's a little bit about me. Now, with TradingView, I don't know if you have to upgrade, but you have this this tool on here that allows you to replay certain where you're allowed to replay the market as it goes. So I'll replay it and explain the patterns as they pop up. And you'll see, I promise you're going to see the same things over and over. Okay. I'm going to go a little slower. There we go. Okay. Okay, yeah, that's too slow. Let's see. All right. What we have here coming up, ascending channel. Ascending channel is a reversal pattern that you will see in the market quite often. And the bigger the time frame, the more the pips, as Jamie has showed you all. So with these type of channels, you can actually trade the channel both ways, from top to bottom. But the idea where you will want to trade is the way that the channel is going to reverse. So with this being an ascending channel, this comes after a bullish move, a bullish impulse, and you should be looking for a bearish move to come. So let's see what happens. Bearish. Bullish meaning buy, bearish meaning sell. And here goes another pattern.
Do me one favor. If I had noticed that ascending channel, how many pips could I have caught to the downside?
You could have caught, and this is on the 15-minute. The reason I'm marking up on the 15-minute is because you see more patterns.
Yes, 15-minute is very important for patterns, guys. So in 14 hours, you could have caught 267 pips, or really less than that if you slide it over left a little bit. That was a straight drop right there. And 9 hours and 45 minutes, you could have caught 265 pips. When you learn market structure, you would have noticed that was at a supply zone. And because it was forming that pattern, we were all expecting a sell. And you can also notice the divergence at the bottom that Jamie was talking about.
Yeah.
All right, continue, son.
Walter, can you please explain to the people of how you knew that the ascending channel was over and you got in for that sell?
I knew, the ascending channel is officially over when it breaks the trend line for the channel and retests. A retest is a flag, so that will be considered a bearish flag. Now, as you all get a little bit more experience, you will understand that flags will definitely come in all shapes, sizes. Sometimes it's one candle, sometimes it's two. In this case, it was actually two. And I consider this the retest because this was below the break and it retested and continued.
Can I point out something before you move, sweetheart?
Yes.
And y'all call him this because he's like my son. I already claimed him. You see, when it broke your trend line, what did your EMAs do and what did your MACD do? Something we learned at the very beginning of tonight, guys.
It curls.
So you got, here's all the confirmations you got. You got an ascending channel, which we know is a reversal pattern. You got divergence on your MACD, like Jamie just showed us. Your EMAs cross and your MACD cross. You got 4 confirmations right there. Oh, and you were at a supply zone. So you have 5 things telling you this was getting ready to happen.
Actually, 6 too.
Go ahead.
6, that retest.
All right, you're right.
You got
I taught him well.
All right, so.
That's awesome. Wow, 6 confirmations in one. Wow, that's awesome.
Thank you. Now we got a triple bottom. Triple bottoms, like these patterns like this will be a little bit tougher to identify because sometimes these can be mistaken for a flat flag. But this was considered a triple bottom because I considered it a triple bottom actually before I even allowed the bullish move to continue over here because of how stretched out it was and how slow price moved over this period of days. And this was, or a period of hours rather. Oh no, it was days, yeah. That was 2 days. 2 days. It took forever to make a move. And that formed that triple bottom. Okay. Let's see what we got next. So that triple bottom led up to a bullish move.
Did you stay in that trend the whole time?
Oh no, this is me actually just going back. I wasn't trading then.
Oh, okay.
He's
Yeah.
back testing.
I'm just getting familiar with patterns.
But once it broke that and crossed over the EMA, technically you would have stayed in that for that whole time.
I definitely would have entered. Yes, indeed, I would have.
And when it would have crossed at the top, that's when you would have came out.
I would have exited.
Okay.
And again, if you remember at the beginning, that EMA, when that blue is on top, you're in a buy, and see when it crossed back over is when it went into your sell. And the same happened with your MACD. It crossed back over that 0 line on the histogram.
Right here, I consider this as a double top or an M, because I see, well, first on my left, I see price came up but faked out and closed. Literally, the second candle, where it basically overall price never went back above these candles over here. So this was a fake out for the market. And then you have more wicks indicating that, okay, price could potentially reverse. So I considered that a double top.
So it never surpassed its previous high, correct?
Never surpassed previous high.
Okay, that's the first time I heard that. So when you have multiple wicks like that, that's a fake out?
It's potential. It depends on where you are in the market. You always want to know where you are. So this could be a supply zone on my 1 hour, or it could be a supply zone on my 1 hour or my 4 hour. I wouldn't know that. I was just focused on the 15 to identify these patterns.
If you're having wicks on your smaller time frame, they're definitely going to be bigger wicks on your higher time frame, so it would definitely show. And we can go back and look at that later. But if you're on a smaller time frame and you see a wick, it's definitely a wick on a higher time frame or a fake out.
Okay. Now, what we got? Okay. Right in this area, I did, I took a Fibonacci. I don't know if you all know what that is or are familiar with that, but it's a measurement tool that has key points for potential continuations after you get flags. And I got a 50% rejection once I took my Fibonacci. Now,
put one up. Put one up so they can see it.
Yeah, okay. There we go. It's just a retracement tool.
Perfect.
It's just a retracement tool. So when you're looking for buys and you get flags, so when you get bullish flags, you want to swing low. You want to go from swing low to swing high for your impulse. Now, the reason I went so far up on this impulse is because I didn't really get a genuine correction up until this point. I could have tried to do this, but that would have been a smaller impulse. So I wanted the whole move because this factored into the 50 mark on my Fibonacci for the continuation up. Now, after this continuation, let me remove this. This had to be news. Usually when you have large spikes, large fake outs like this, reversal was underway because of fake out. So usually when you have big moves like that or momentum due to news, it will reverse after a while, or it will go into a channel. So if this was to go into a channel, like we, what was that? It was a crash on, it was actually GJ earlier, I think this year, and it crashed. I think it was the 1st of
It was,
January.
January 2nd when the JPY spiked. Yeah.
Right.
Miss Mahogany covered that spike earlier.
There you go. So they spike, and then right after that, you just see a long channel. It's just been in a channel for the longest. So sometimes that happens. But I knew that at some point it would reverse. But this actually reversed fairly fast. Now, we have a flat flag. You have several types of flags, and this is a flat one. And this flag is a continuation flag after my impulse. So you all will see that. There we go. So after that flag, you typically never want to hop in on the impulse unless you're familiar with zones and you willing to take the risk. But the continuation comes after the correction, and that's the safest place to get back in the market. And that was 130, 127, about 5 hours. And then let's see what we got. A descending channel leading to a reversal within an expanding. Well, this is actually a bilateral triangle. That's right.
You would say that it was expanding.
Yeah, no, I meant to say a bilateral. This is a bilateral. When you're dealing with bilateral patterns, you always want to pay attention to about halfway to the end of it, because it could go either way. So the last little bit of that pattern will tell you what could potentially come. And we had a descending channel leading to the impulse up. Bullish flag, bilateral flag again, descending channel. Impulse up, flat flag, continuation.
So how are you able to distinguish the difference between the bilateral and a expanding triangle?
A bilateral is, let me see. My bilaterals.
Y'all, and this child, y'all excuse me, I call him that because I sort of adopted him last year. When I told him about patterns, he got some notebook paper and he drew out all the patterns and stuck them on the wall back behind where he trades. He hand drew out all these patterns to memorize them.
So let me see. To know the difference between a bilateral and an expanding, well, the safest way to know that is when you have the impulse to the downside and it breaks and retests, and then you get in for that continuation. But if you see here, this made a descending channel, which is a reversal pattern around about halfway to the end of the flag, which led to the impulse up.
Hey, I'm trying to remember, Walter, but on the expanding, doesn't the flag open up to a 61.8?
Yes, it actually does.
It's a lot wider than a bilateral.
Let me see.
Wait a second. Hold on. Are y'all hearing this? This is coming from a 20-year-old. And I'm sitting here taking notes about this is my first time I heard of a bilateral flag.
Me too. This is awesome.
This is absolutely awesome. Walter, you doing the dang thing, bro. Handle your business, baby boy.
Thank you. Okay.
This is awesome.
I see that rolls.
Eric, you already know, man. Okay. So now this is where you get good. This is where you get real good. We got an ascending channel. I didn't put that. I mean, I'm pretty sure you all know what that is by now. Wicks at resistance for a surprise reversal after flat flag creating a channel. So this was my flat flag right in here. But patterns change. So the main thing that was hard for me to learn and master, and I literally just learned this dealing with a new method last week. You have to be flexible in your expectations, but strict on your rules. And the rules will apply, I will only hop in after a retest of the break of a flag, or, I will only hop in after a retest of a break of a channel.
All right, repeat that to them about expectations and rules, sweetheart. They need to write that down.
Okay. Your rules for your trading. Remember this, please, or you will blow accounts. You got to stick to these rules. You don't set 5 rules and only take, only take 4. You take all 5. You must be strict on those rules and flexible with those expectations, because this is not our market. We just playing the game. We're just trying to trade in line with the dealers. So there you go. Flexible in expectations, strict with your rules, and stick to that. Have some discipline, and you will be able to compound an account.
Yes, yes, yes.
When the student becomes the teacher.
Right.
If you're not flexible with their expectations, you end up forcing the market.
Right. Right. That is so true, because I've done that. I was actually, a lot of people, as a matter of fact, a lot of you guys actually are going to be the opposite way around. Like, you're going to be flexible with your rules and strict with your expectations, trying to force the market. And that's not that, and you don't want to have that mentality, because then you get in this state of depression. You want to beat yourself up. You doubt the knowledge that you've obtained. You just didn't apply it correctly.
Correct.
You got to be flexible with your expectations, because this stuff changes all the time. I mean, look at it's a lot of things I didn't identify previously, because I'm just focused on the main things that I'm trying to identify. But it's just like, you definitely have to be flexible with these expectations, because we don't make the market. We just trading, you want to trade in line with the dealer. So now I'm actually I paused it right here. Sometimes when you have wicks, like previously I mentioned wicks, this is a moderate wick, a moderate fake out. But sometimes they will do this to induce sellers. You just never hop in on an impulsive candle, because you might not get filled until down here. Like, always hop in after a pattern. Please listen to me. Seriously. Hop in, get in the market after a pattern for that direction with some confirmations, with some confluence, which is a list of things that will go in line with what you have learned, that will go in line with your rules for you to enter the market. Now, like I said, never hop in on just this impulsive candle. You would have hopped in after this retest. If they if you notice this flag right here, you would have hopped in after that. But do not, I repeat, never. Because if you get filled down here and this was to, be a double bottom and it skyrocket, then, you hit your stop loss. Or like me in the beginning, I thought it was okay not to have a stop loss. Have a stop loss. Not a mental one. Have a physical one for your money to preserve your capital. Because if you don't, this move was fast, as a matter of fact.
How do you factor your stop loss?
You factor your stop loss. You can. It depends on how well you are with entries, and over time you'll get well. You'll get pretty good with that. But so just for basic patterns, like let's say, this one. Let's say you wait for it to break. You would set your stop loss above here. Now, when you get real good at this, Like, you know, you just learn you can trade the channels. It's the same thing. So when you get really good at this, you'll start to notice how it starts to, like, the candles start to fade out at the top of the flag before following. Before following through and before following, like you see those wicks. So you can have your stop loss a little tighter. And we actually have an individual that's really, really well with tight stop losses. I mean, like 10 pip stop loss and 500 pip take profit. So
Walter, go back to that channel right there where you were.
this one,
Once you guys learn these patterns and you know that that is a bearish flat, you could have sold right there where his cursor is and had like a less than 5 pip stop loss and never got taken out.
right?
You
And
sell at the top of those channels when you know it is a bearish flag, and when it's a bullish flag, you buy from the bottom. So you sell a bearish from the top and you buy a bullish from the bottom.
Yep, indeed.
Is there a such thing as stop hunt?
Yes.
As a matter of fact, the stop hunts are the weak.
They're typically at supply and demand zones.
Yeah.
Say that again.
They happen mostly at supply and demand zones.
Gigi, that place where you asked him to put the cursor right there, is that a bearish engulfing to help that confirmation?
Yep. Right there.
Yeah.
And
That's
plus you can
definitely
watch it
very
on a
engulfing.
smaller time frame once it's inside that channel and it's been identified.
Okay.
We good?
Yep.
Okay. All right. Another flat flag leading up to the continuation down. But, see, check this out. Price started leaning over to the right. It just started leaning. Then it got weak. Descending channel. Flexible with those expectations. Because, I probably would have expected this to continue going down. But if I got stopped out, I wouldn't be mad. I just, increase this, move up my stop loss.
What did you say about that box up there with the? You didn't explain. Yeah.
Which one?
Right.
Right here?
No, above. Yeah, where there's two of them. Yes.
This?
Mm-hmm.
Yes. This one I stated to be flexible with your expectations.
Oh, because it didn't do what you're expecting.
Right. I had wicks at resistance for a surprise reversal after a flat flag, creating a channel overall. You see that?
And what he's saying is it started out as a flat flag, but then a pattern can change. It turned into an ascending channel.
Awesome. Okay.
All right. So we got our descending channel leading to our reversal to the upside. And now we have an expanding flag after an impulse, which typically would lead to a continuation to the upside. Let me see. Let me move this out the way.
I stopped him in the middle of his study to come explain this. He sent me a screenshot what he was doing. I'm like, well, you're up next on ForexNChill, so you can just come share it with everybody.
That's great.
So we got a key resistance. We got a key level of resistance for a reversal, just due to the stop hunt, wick, fake out, however you identify it. You see that level. I didn't draw a line there because I didn't want to interfere with my studies as I continue going. Because I plan on actually doing. I don't know how far back this is. What is this? Yeah, 2018. I plan on continuing this up until today. And then there's probably a pair that I won't trade just because I have this knowledge on here. And I'll replay it every day until I got it, So right here, this would have been a line of resistance or maybe a supply zone, depending on what time frame. And this was key level because it continued to reject at this level. So that's why I said key resistance for reversal. Now, expanding flag, like I said, that's one of the flags that'll lead to a bullish move or a bearish, depending on which direction you're going in the market. And because it hit this level, it reversed. Now we got a descending channel. Right here is a rejection on my 618 for my Fibonacci. And I will show you all that retracement tool for my flag. Oh, actually it's further. Oh, I stand corrected. 786, right in between. Can you all see that?
Yep.
So I had a rejection and it continued to the upside. Now, oh, wait, let me move this. Okay. Rejections. Yeah. So, okay, we got a rejection. Now, okay. Ascending channel takes a while to break uptrend and price slows down towards the top. So you see the impulsive moves, the big moves. As they get closer to the top of this ascending channel, price slows down. And like someone mentioned earlier, as a good confirmation, a bearish engulfing candle, which is a candle that engulfs a previous candle. So it's a candle that is larger than the previous candle. And the fact that it's a sell candle, a bearish candle, that makes it the bearish engulfing candle. And now you got your divergence as well. Your break, retest, engulfing candle, divergence, crosses for your EMA, and the crosses for your MACD. I'm going to press play and I'm going to measure this. Okay. So, with those confirmations, say you get in after this candle just to be safe.
That's crazy.
So 100, yeah, 150 in about 6 hours. I think that's pretty good. So right in here, sometimes patterns like this, these little V patterns can be a little tricky, but overall, this is actually like a W kinda, but sometimes they can be a little bit tricky. Now, this wick, this little fake out, let me know that this possibly could not be continuing down before I even got my descending channel. So, no flag for continuation, which is the correction. The correction confirms the impulse coming after any impulse. So impulse, flag, continuation. Impulse, flag, continuation. If you don't got a flag, you don't got a continuation. Now, sometimes you might get the continuation, but don't be mad at yourself for not hopping in because, one, you always have more opportunities to make sure that your rules fall in line with your personality so you make money. So don't get upset. Don't get in your feelings because you missed a move. Oh, well, it's okay. More will come. And it's just best if you follow those rules and you stick to these patterns because, like, you know, anything can happen. So this could have easily reversed. It could have, but it didn't. I learned the patterns and it played in the favor of it, of the mark. I mean, it played in the favor of the rules. So the descending channel leads to correction to the upside. I mean, a continuation to the upside. Bullish flag, but price weakens on the uptrend prior to the flag indicating weak price range. Watch this. You see that? So what this means, bullish flag, but price weakens on the uptrend prior to the flag indicating a weak price range, I didn't get a strong continuation up. As a matter of fact, the next candle I got right after it was almost equivalent to it. So price slowed down. And then what happened? 4 wicks to the top, wicks to induce more buyers. So this is wicks to induce people who trade with emotions. And it dropped. And it went up.
Now, I want to point out one thing about where it tested the bottom the first time of your descending channel.
Mm-hmm.
You didn't really get a strong impulsive move like looking right. So what it did, if you look on a higher time frame, it probably pushed up, then came back and retested, then gave us the aggressive move to the upside. And plus, you were still finishing off a big bearish move. So that was probably like a, 38 on your Fibonacci.
Right.
Cover that flag there.
Mm-hmm.
You draw Fibonacci from your top to your bottom. It probably bounced off like between your 38 and 50.
Let's find out.
It did, and then bought back up from the bottom. Boom, boy.
Ooh, you mad.
Good job at that Fibonacci. So really, it's corrected from your bearish move to the downside, rejected off your 38, then you got your impulse move to the upside.
Look at that. I didn't even pay that no attention.
Don't you love that golden ratio?
And I think that's where I stopped. I think this is where I got interrupted. It is.
Well, I was interrupting you, don't you?
This is.
But yeah, that's why it rejected and came back to the downside. That was a big bearish move. And so whenever you get a big move like that, it's not just going to reverse. The first time it hit your 38 fib, came back, and then it gave you an impulse. See, that first move to the upside was corrective. It wasn't aggressive. You see the formation of your candles, they weren't that big, like at the bottom.
All right here.
You said it faked them out. You see those were corrective candles. You didn't really see anything big and engulfing and impulsive until it came back and retested. And then when it broke out hard. See right there, it pushed up, hit your 38, came back to like your 23, pushed back up to your 38, came back to your 0, then broke out. That makes sense?
Yes.
Well, boy, you are killing those patterns, boy. You watching Wedge Train? Let me stop.
Nah, I haven't even got his session yet.
I love you.
You better watch those videos I sent you.
I am.
All right. Everybody, y'all give this guy a great big round of applause. Virtual standing ovation, right? How many of you were not aware of these patterns until tonight?
I love it so much.
Great job. Yes.
Good job. Fantastic.
Because I'm going to tell you, whenever I mark up these patterns, I have a lot cleaner trades. These patterns are they are controlled. These patterns are made by the market makers, and it's telling you what they are doing and who's regaining control of the market, the buyers or the sellers. All right.
Gwen, can I share something right quick?
Yes,
I love it. See that?
Look at that. Ascending channel, impulse, right on up to the 618, continuation down. Let's see how many pips was that. Oh, wicks, fake outs, and engulfing bearish candle. It's a lot of good old stuff.
Double top and double bottom, forming a W.
Right here?
Yeah.
Let's find out.
There you go. That's that big dub. They came right back on down.
It was a smaller W and then it formed a bigger W.
All right. But the reason it came back down, look, you got your another ascending. You got your wicks, you got your ascending. I mean, all that stuff, it's just confluence. Once you learn these things, it's like pieces to a puzzle and you get the treasure. Just gotta
Hey, Walter, I got a question.
Yes.
All right, so I'm trying to figure out a way to study the patterns.
Mhm.
So you go and replay it. But
Yeah.
correct me if I'm wrong. Before the EMA crossing, most of the time you're gonna have a pattern before it crosses, right?
I'm assuming so. Yeah, actually you will before your impulse. Yeah.
Just remember what Stevenson Lindor tells us on IML TV every session. Before every move, you have a what? A pattern.
A pattern.
Before every move, there is a pattern.
Definitely.
Yeah.
Because I was sorry.
That's what Desmond said. That you should not enter any trade without a pattern.
Right. You're jumping blind into the market if you don't know what the pattern is, because the pattern
Don't gamble.
comes next.
Don't gamble.
Yeah.
Do not gamble. But
And
yes, this is
whenever you see those really, really big ascending channels, that's probably a correction or reversal that's due on a higher time.
Yep, a higher time frame. That is right.
So that was probably due on like a daily.
So are you saying to look for this more on the 15-minute as opposed to the higher time frame?
No, not necessarily. No, I only looked on the 15 because I was just getting familiar.
You will see these patterns on all time frames.
Yeah, you definitely will.
The higher the time frame, the bigger the move. But for your day-to-day trading entries and exits, smaller time. The 15 is like the perfect time frame.
Right. Like check this. So you see this descending channel right here? This is more likely a 15-minute descending channel. But this one right here, this is possibly a 1 to 4 hour. It's like when you know where you are in the market and you're able to identify how large these patterns are, you're a higher time frame or maybe even a smaller time frame is due for something different. Like this W right here, this is a V on another time frame.
Okay, so are you switching to the line chart sometimes to see this as well?
No.
So you're keeping it on the candle always. Okay.
Mm-hmm.
Someone is asking about the lines on the MACD. Those are your signal line and your MACD line.
I made mine different colors so I could see when they cross over. That's all.
He's got the default settings, except he just changed the colors.
And
they are part of your indications on, looking at reversals and continuations too.
Okay, so let's put this to the test, guys. I wasn't planning on doing this, but it's okay. It's okay. What do you all think is coming?
Going to the upside.
A sell.
Continuation.
Continuation down?
Yeah.
Down.
Yep.
Okay, let's find out.
Oh, wow.
I called it. I saw that.
Now,
no, you got faked out.
Let's figure out why though.
It's a sell.
No, it was going up because the last candle was
Yeah, it went up.
But wait,
because the last candle it was in
a bullish, right? But not only that, remember your expectations need to change, guys. This went from a bearish flag to an ascending channel.
Ascending channel.
Yeah.
That's a big
It
move
was
on the
still a
higher time frame.
continuation pattern because it didn't take out the previous high. If you
Right.
look left where it broke out into a sell.
Over here.
Yeah. If you were to draw a horizontal ray there, all it did was retest that and continue to the downside.
Okay, let's see if we can find some more.
Chanel, if you're on MT4, it doesn't have the same MACD. That's why we all use TradingView. We really like TradingView better.
Is that an ascending channel?
Right here?
Yeah.
Yes, it is. Okay. Ascending channel.
And your MACD is coming back to the downside. Then your EMAs are going to cross. Let's see.
That's
Let's try
fine.
and predict the future.
Let's see.
Whoop, whoop. Come on, girl. There you go. Whoop, whoop. There you go.
That's another thing. These patterns and this market will not only humble you, but it will help you develop a serious amount of patience. Because you see this impulse, that was a flag as well, but that was just a longer flag. So typically, the longer the flag, the harder the move will fall. It was just a longer flag, and it fell.
And the longer a pair consolidates, the bigger the breakout is going to be.
Sorry, Gigi, could you repeat that, please?
The longer it consolidates, the bigger the breakout will be.
Also, you can tell that's a longer flag because the MACDs did not cross. I mean, the MAs did not cross.
Okay. I just learned that. You just taught me that. So let me write that down.
Down there too, right?
Let me write that down. Oh yeah. That's another thing.
Yes.
When you so let's go ahead and go over to MACD. So crossover, you got your sale going. As long as it's below your histogram, it's still a sale. Now, when you have pullbacks like this, a crossover, then a crossover, you have two crossover, and it's under, still indicating the sale. It's just a flag. See that?
Mm-hmm.
That's all that is.
Even if you go on the left there on that on the first impulse.
Right here?
On the ascending channel up. Yeah,
right
there.
here.
Up, no, on the left.
Oh.
Right
up, up. Yeah, up on the left, right there.
Okay.
Yeah. So you see, that's why it's a second ascending channel because they didn't cross right there.
Right here.
Yeah.
Right.
No, up.
Oh, right here.
Your EMAs didn't cross yet.
Oh, okay.
So because that's a second ascending channel because the first one didn't cross, so obviously it wasn't a confirmation.
Wasn't ready yet.
It wasn't ready yet.
Okay.
And then after the second channel, you see they crossed right there.
They crossed, then you got your retest and your bearish engulfing. Continue to the downside.
Correct.
Walter, do one thing for me. Go to a 4-hour.
Okay.
If you want to mark your date before you do, you look at your date real quick.
It's okay. It's all right.
All right.
I'm far back. I see it.
All right. If you look at your MACD on a higher time frame, you'll catch the whole up move. The lower time frame is for your entries. So you see when it crossed the MACD on your higher time frame, it stayed above it until it reversed. So when you're looking for entries, you look on the lower time frame. When you're looking for your overall trend, you look on a higher time frame.
And the reason we look for the entries on the lower time frame is because by the time you see it on the higher time frame, it already happened.
Hey, just mark your date right there. What's your date right there?
Oh I'm just.
I was going to show you how to get in on the 15-minute, but hold it according to the 4-hour. So
Okay.
just February 15th. Go to your 15-minute on your February 15th. The world's biggest breakup date. The day Cupid dies. All right, that's that area we were looking at was similar to the area we saw earlier. We had a breakout and a retest. So you see where you would have gotten in. Put us a little line through where you would have gotten in. Right there where your EMAs crossed and it had crossed your MACD, right there. Yeah, put us a line, like a line through there. Big enough that when we go to the 4-hour, we'll see it. You gotta make it a little bit bigger. There you go. All right, now take us to the 4-hour.
Hold on, show them the stop loss.
Yeah, put the stop loss right below that wick.
I think that'll do.
All right, now let's get to this 4 hour. So we would have entered on the on the 15 minute. All right, we're all the way at the end at current price. And you could have held it up there to the top of your zone. How many pips would we have gotten?
We would have gotten 724, 30, 730.
Not bad.
Showing the stop loss, the risk to reward.
Risk to reward, what, 10?
Ah! Let me
12?
Let me stop. What was that we were saying about? Let me stop. I ain't no way I'm going to risk no 50 to 100 pips. I'm sorry. Sorry, but not sorry. Not when I can catch 700 pips off of a 10 to 15 pip stop loss.
Now show them if they would have got in at the 4 hour, if they was trading wrong on the 4 hour. That stop loss.
Yeah, put the horizontal ray there.
Don't hurt him, Max. Don't hurt him, baby.
Go up, go up. Where the
Would you have moved your stop loss as you've gone up, though, Guinevere?
Say that again.
Would you have moved your stop loss?
Oh,
as you
yeah. I
Okay.
ain't giving back no 732 pips. Hell to the no.
I'm just
Are
making
we
sure.
still recording?
We still there, right?
Oh God, this is Forex and Chill.
Still
Okay,
recording.
leave your stop loss where you had it.
Mm-hmm.
But
All
now
right.
we would have entered where the EMAs crossed or where they got that retest.
Oh, yeah, right here.
So from there to the bottom, how many pips stop loss is that?
That is.
When you enter on a higher time frame. Yeah, y'all keep that. I'm gonna stick to this.
Let me show y'all something.
Put me in 100 pip drawdown, I'm gonna cry. Talking about it gonna reverse. It's gonna reverse. Just wait. It's gonna retest. Then you can't even open up any more trades because that one you waiting for that one to go the right way.
How many times I said that?
Yep, probably as many times as me.
Look at this.
When you know better, you do better. We know better now. Yeah.
This your 5-minute entry.
And it never retested. It never came near your stop loss.
Mm-mm. That's your 5-minute entry right there. So yeah.
Can I get a boom shakalaka laka?
Well, that's it. I mean,
All right, y'all. I think that's enough for tonight. It's the weekend, and on Saturday nights after this is over, I just go watch TV. I forget all about Forex.
You
for the next 12 to 24 hours.
I hope you all enjoyed that.
Thank you, Walter. What I do
You
want
are
to
a
say,
beast,
that was
boy.
wonderful.
That
Unbelievable.
was awesome. Thank you.
sir.
so
You're
much.
welcome.
Thank you, everybody.
That was
Gigi.
really nice.
Gigi,
Hello,
what I
Gigi.
do want to say is that everybody has to understand that we are all talking in different languages, but saying the same thing. We all talking about patterns, but we got different ways that we're saying it. We are talking about confirmations.
That's why I wanted to showcase all the people, that are doing their own thing, but we're all doing the same thing, just doing it different.
Yes.
So we all got the same end result, but we get there in different ways because we all see things differently. But all you guys are awesome. I'm so proud of you. Keep doing great things. And next Friday night, we have Terrell Rolland. If you don't know him, you need to know him. Go find him on, hey, Walter, go to YouTube for me. I want everybody to subscribe to his YouTube channel. Did anybody learn anything tonight? Because that's the whole purpose.
Yes.
Yes, ma'am. Oh,
It's
yeah.
Hello.
Yes, absolutely. Thank
Hello,
you.
Gigi.
Thank you.
Yes.
Thank you, Patty.
Sorry,
Thank you, Walter.
sorry, before you
Thank
go, I
you,
will need
King
you
Abu
to help
Dhabi.
me with
Thank you,
the
everybody.
setting of
Thank you all for inviting us to this free session or the Friday session. I really appreciate it. I picked up a lot of knowledge tonight.